Hello everybody, welcome back to another valuation investing video, and today in this video I'm be analyzing Google stock, in which, as we can see here, Google is up almost 7% after hours after huge news coming out of the courts today, where they basically have told Google that they do not have to sell off Google Chrome. So this is huge news for Google stock today. And taking a look here, the market cap right now is at $2.5 trillion, but after this recent rise, we could probably see this up to 2.7 at least trillion dollars tomorrow, depending on where we open up. But right now we are up nearly 7% after hours at all-time highs. As we can see, 52-week high of $215, but right now we are at $226 per share. So with that being said, I'm getting into Google stock, and disclaimer, this is actually my largest position in my portfolio. I have the most amount of money in Google stock because I believed Google stock at $150 was insanely undervalued, and I am still holding a good amount of shares right now, and it is still my largest position. So with that being said, I'm going into Google stock today and looking at the financial health of Google, taking a look at the court rulings. Then finally, I'm using my intrinsic value calculator to get a fair value price for Google stock and to see if we should be buying today, even at all-time highs. So with that being said, taking a look at the biggest news coming out of Google for today and why the stock is up so much. Google Chrome court ruling. As we can see here, the judge handed Alphabet's Google a key victory today, where ruling against US prosecutors' bid to make the tech giant sell off its popular Chrome browser and Android operating system that was part of a larger antitrust crackdown on big tech. So this is why the stock is really soaring, and why the stock was actually pretty suppressed for the past few years. This was one of the main reasons, because of these rulings against Google. And with this ruling that Google Chrome won't be sold off, this is a huge, very positive news for Google stock today. But the court still ordered Google to share data with rivals to open up competition in online search. But nonetheless, this is still very good news for Google. As we can see here, while sharing data with competitors will strengthen Google's rivals to its market dominating advertising business, not having to sell off Chrome or Android removes a major concern for investors who view them as a key piece to Google's overall business. And Google has said previously that it still plans to file an appeal, which means it could take years before the company is even required to act on the ruling, where they would have to share their data. So this won't even be in effect for the next coming years, probably, where they have to share data. So this is very good news, where they're also going to be appealing this ruling. So this is really good for Google. Taking a look at why Google has been soaring over the past few months, Google stock has been up nearly 30% over the past 3 months, I'm pretty sure, really outperforming the market by a good margin, even though year to date it's basically in line with the market, but now it's really outperforming with this huge surge. We can see continued dominance in core businesses, search and advertising. Google's search engine remains the undisputed leader, and a huge profit margin, has huge profitability for Google, and continues to help their revenue surge and grow over time. Also, YouTube's success as a platform for video content and advertising has been another significant driver for its revenue. And I believe the reason we see Google actually continuing to increase isn't just because of this continued dominance. I think it's because in their recent earnings, they did say that AI is actually accelerating growth. So previously, people thought that AI could actually suppress Google's growth and take market share from Google, but in their recent earnings, they actually said AI is helping them with Google Gemini, increasing their searches and revenue. So that is a reason why Google continues to go higher. Also, we can see Google Cloud has really helped Google. The Google Cloud division has been a major growth engine for the company, and it's continuing to accelerate in growth rate, growing 30+% just last quarter, year over year. So that's also really helping this company grow its profit and revenue. Also, other bets. Alphabet's other bets, such as Waymo, is pretty good because Waymo is a self-driving technology, kind of in line with robotaxi with Tesla. So this is competition, and Waymo has self-driving already active. So this could be another good growth driver for the future, but it isn't really a big part of Google. As we can take a look here, we can see that Google all their other bets, it's only made $373 million in revenue. So right now it's basically nothing. So don't keep too much eyes on it because it's not something huge for Google right now, but in the future definitely could be. But as we can see here with Google search, we can see record $54.19 billion in revenue. Also, YouTube ads is near record. Although in this quarter of 2024 this was high, in 2024 we can see huge, which is pretty much an anomaly for that quarter. So still growing that YouTube ads. Also, advertising continues to grow. Google subscriptions, everything is basically growing with Google besides hedging gains, but Google Cloud really is accelerating this growth too. Google Network is the only thing that hasn't really been doing well for Google, but other than that, we can see just increasing revenue by segment. Basically, every segment continues to grow, which we really like to see. And taking a look at the other, we can see here why Google has been soaring is the strategic focus on AI integration. Alphabet is heavily investing in AI. Like Gemini, the company is positioning itself at the forefront of the AI race with Google Gemini, and they have really been making a lot of money off Gemini, and the investments have been working well. However, capital expenditures, Alphabet has been making substantial capital expenditures. On face value, it probably doesn't look good, but I think this huge CapEx spending will help their investment in the future to grow even further because they're one of the highest CapEx spenders right now for AI on basically data centers. So I think that this is good for Google. Also, their financial discipline, where their margin is expanding, and share buybacks, which I love with Google. They continue to buy back shares, which is a really good sign. As I'm a Google investor, over time I actually will own more of the company as they buy back shares. Now, taking a look at the Google products, like we did go over earlier, the Google services, we have Google Search, YouTube ads, Google Network, and Google subscriptions, which is their main advertising, which they make a lot of money off of. And then taking a look at the Google Cloud, this is basically where their largest growth is coming from, which is Google Cloud. Last quarter, they grew 35, I think, percent year over year. So this just continues to grow at a very fast pace. The Google Cloud platform is the main part of the segment and provides businesses with cloud infrastructure services such as data storage, computing power, and machine learning tools. So this is very similar to Microsoft Azure and AWS. Google Cloud is basically a competitor with those, and all those continue to grow. Also with other bets, as we saw with Waymo, that is their main bet with other bets because of the self-driving technology and potential for huge gains with that. Now, taking a look at the financial health of Google, using my 7-step stock analysis, we can see we get 7 out of the 7 key metrics, which is why this is my biggest position. As we can see, the forward P ratio at 22, this means you're paying $22 for $1 of future earnings per share. When the market's trading at about a 25 PE ratio, this is undervalued compared to the market, and I believe Google is a much better company than the average in the S&P 500. So I just think that it's so undervalued for the high qualityness of Google. Also, the ROIC, 32% almost. That means 32% of the money that they reinvest back, they get a return of 32%. And we want this greater than 10%, showing that they are very efficient in investing back into the business, which Google is one of the best companies with that at a 32% ROIC. That is insanely high. Also, revenue growth 17% each year over the past 5 years. Also, very fast growth, especially for a large company like Google. Also, the EPS growth at 30% is insanely high. That is just insane for a company like Google. And the shares outstanding, they're buying back at 2%. I love to see them buying back shares. As we can take a look here at the shares outstanding, they really started to buy back shares back in 2018 or 2019. They really accelerated these buybacks at almost 3% now over the past 3 years, which I really like about Google with these buybacks. Also, the debt to free cash flow. This is a new metric that I've created in which the debt to free cash flow, this basically shows us in how many years can they pay off all their debt. And with this being said, they can pay off all their debt in literally literally a third of a year. In basically 4 months, if they really wanted to, they could use all their free cash flow to pay off all their debt. So we normally want this less than 3 years, but with Google, it is literally a third of a year they could pay this off. So this is very good. Google has one of the best balance sheets. They have almost $100 billion in cash, I'm pretty sure, and barely any debt with like 20 billion. So if they really want to, they could actually pay off the debt right now, right away. So with that being said, I really like the balance sheet of Google. I believe they have one of the best balance sheets in the market. The only thing I don't like about this company is the stock-based compensation for their employees and stuff like that. That is a little bit of a concern to me, but I think I can get over it with all these other metrics. Taking a look at the expected EPS growth by analysts, we can see analysts expect them to grow at 15% over the next 5 years. And taking a look here, they actually expect the revenue to grow at about 11%. So they're still expecting pretty good growth out of Google over the next 5 years. So I really like this about Google. So with that being said, I'm be taking a look at my intrinsic value calculator in order to get a fair value price for Google and to see if we should be buying the stock more today after this huge surge in price at all-time highs. So first, taking a look at my intrinsic value calculator, for the bear case, I have to do the annual revenue growth rate. So I think on the bear case for Google, say they start to lose market share to AI, Google search starts to decrease potentially in the future. I think bear case, worst case scenario, this company grows honestly 7% each year for the next 5 years. I think that is worst case scenario for Google. Now for the base case, I'm actually going to do, let's do 11%. I believe they can get up to 11%, honestly, for Google. Now for the bull case, say AI really starts to help this company continue to grow. Say Waymo really catches up with their revenue segments and starts to really grow in the future. Let's say 15%. Do I think 15% will happen? Probably not. I think the base case is definitely what will happen. I'd say 10 to 11%, and that's basically in line with analysts, and I do believe that's what's going to happen. But bull case 15%, somehow if that happens, then we will all be rich if you own Google. So going for the future profit margin, taking a look at the past profit margin, we can see it has been increasing since 2020. Right now it's at about a 31% profit margin. However, it is slightly skewed due to accounting rules, so we got to keep that in mind. So I think the fair net profit margin right now is probably around 30%. So with that being said, going over to my future profit margin, with the bear case, this is basically saying that AI could take market share. Google has to reduce prices. So with that being said, for the bear case, let's say it goes to 27%. Base case, let's do 30%, and bullish case, let's do 33%. I think that's pretty fair. Now for the future PE ratio. I believe Google has a very big moat. While AI could potentially take over, I still believe Google search will be the dominant player, and I don't see it going anywhere in the future. Also, you have things like YouTube, which you're watching on right now. I think YouTube is probably the best entertainment system, basically, for long-form content, and I believe that is the best and won't be going anywhere soon. I think more people are watching YouTube than cable or anything like that, so I believe for the future PE ratio, growing 7% each year, I think with the moat that Google has, I think a 20 PE ratio could be fair. Now for the base case, let's put a 24 PE ratio. In bullish case, let's do 28. Now for the shares outstanding, as we saw, they were buying back at about 2 to 3%. So bear case, let's say they only buy back 1%. Base case, say they buy back at 2%. In bullish case, say they buy back at 3%. And with this being said, I still think Google is at a very good price to be buying right now. I think base case, you can make 12.5%. Bearish case, you can still make a return. Worst case scenario, I think you could still make money on Google. And then bullish case, if we think they can grow 15%, I think you can make a 24% return on your investment. I think with the base case, say we are even a little bit more conservative, say they grew 9%, you could still make market average returns, and I think that's very conservative numbers, and this is why Google is my largest position. So thank you guys for watching this video on Google stock and why this is my largest position, and I plan on it still being my largest position. So thank you guys. Please subscribe, hit the like button, comment down below, please. Thank you guys for watching, and see ya.